Hi, I'm Matt Lang with Wealth Shield Financial. I'm the owner and managing partner. I wanted to jump on here today to talk a little bit about the 4% rule, which is more or less the gold standard in the financial services industry if you're looking to come up with a formula to guarantee income for the rest of your life. You use a 4% distribution rate with, let's say, a 60-40 portfolio split. Traditionally, most planners would say you should be okay. 60-40 allocation for equities to bonds. You should be able to live out the rest of your life and not run out of money. I think that has changed slightly over the last, let's say, decade, and I'm not too sure that 4% would be considered the gold standard at this point. 4%, let's say you have a $1 million IRA, you're looking at a $40,000 income. My question would be, is that enough? You'd be looking at $40,000 a year plus your Social Security. We would need to figure out if that really is going to work for you. Secondly to that is, inflation is very high at the moment and taxes look to be on the way up as well. So if inflation is high and taxes could potentially be going up, is $40,000 going to carry enough weight, or is 4% distribution on that $1 million going to get the job done? I'm not sure it is. I don't think you can just make a blanket statement at 4% and say that a 4% distribution works in all market conditions and it works for everybody. And I don't think that you can apply that to everybody. So I think it's a starting point. It's a point to start the conversation around income and build from there. I think we know that there's products out there in the industry that pay greater than 4% on a distribution side. So we should be looking at those. Once we look at those and we go through a process, we can determine what distribution you should be taking from, let's say, assets that are in like a brokerage account or in a 401k or an IRA, in addition to maybe layering in a product that could provide you a better than 4% distribution rate. And then we have to look at the full context of the plan and make sure that we're eliminating outside risks that could potentially take away from your assets, which would effectively lower the, let's say, amount of money you have, the capital. And I don't know that 4% would be the route for me as the gold standard. I want to see at least incomes make it into the 90s and be successful, and we want to guarantee as much of that as we can. I guess our point to most of you would be, if that's something that you've heard and you've read about and you're concerned with what the distribution rate should be, is to get in contact with us and schedule a 15-minute discussion around how would we do it, what does our process look like, how can we tailor fit one.